What's up, everybody? Today we are going to talk some crypto and real estate. Biggest story in crypto so far today, Do Kwon, and real estate, 7% interest rates. We'll see. So we're going to dive into the first story. Do Kwon, of course. The Interpol apparently gave notice that he's on the red notice list, of course. But he's saying otherwise. He's saying, hey, I'm at the mall. I'm at all these different places. I'm making zero effort to hide. He goes on walks. He goes to the mall. None of the CT crypto Twitter hasn't run in no way that none of us has not run into him in the past couple of weeks in South Korea. 1 million followers he has on Twitter. People are kind of skeptical about what he means, what he's being forthcoming about. We shall see where this goes, but I think this is probably one of the biggest stories in crypto today. What's going on? Where is he? If he's there, he should just kind of walk over and talk to the authorities if that's who's looking for him. But we'll see. And never a dull moment with Luna. And next, moving into Australia. Australia pushed ahead with the CBDC. They announced a pilot timeline. So basically, Ethereum based, we're going to go in the Reserve Bank of Australia, the RBA, is to research the use cases for the CBDC and try out an experiment using Quorum, an enterprise grade private variant of ETH. Today, the white paper, which I'll link in the description, said that the pilot, which kicked off in July, is being run in partnership with the DFCRC, the Digital Finance Cooperative Research Center. It doesn't mean the RBA will necessarily release the CBDC, but we are getting this news that it's going to be completed by mid next year. So exciting news if you're in Australia, maybe. Exciting news if you're not in favor of having a central bank digital currency in your country. Mastercard, NFT world. So the company called Hi, the crypto and fiat financial app, announced the first debit card featuring NFT avatar customization. So of your choice, the eligible cardholders will be able to personalize the face of their card with an NFT avatar that they verifiably own, spend at over 90 million locations worldwide where MasterCard is accepted. So a great way to show people the online community they belong to. Also in the real world, blah, blah, blah. The co-founder of Hi, basically, spend your fiat stable coins and other crypto combined with attractive financial and lifestyle rewards, making them confident that their card is a game changer in the market. So pretty cool news for MasterCard getting into more into the NFT world. Next story, Voyager. Someone's got to buy it, right? So far, the rumors are FTX, of course, FTX, right? Binance and Cross Tower competing. Obviously, we knew about FTX and Binance, okay, to seek transitions for these Voyager customers to their platforms. Cross Tower, though, has proposed to keep the existing platform and app. So the first two would bring them in-house, and Cross Tower is going to keep you all on Voyager or keep us on Voyager. Simon Dixon, I'll link his YouTube channel in the below description. He published these details today on his channel. He's basically saying these three are competing in an auction to acquire Voyager Digital. Each proposed their own terms and conditions, and the details posted to Reddit suggest that, of course, FTX and Binance have the most cash, though Binance is offering more. Cash amount will go towards efficiency and other claims, according to the source. Moving into some real estate, the 7% interest rate. Now, is this a real thing? America's housing shortage and the Fed Reserve's inflation battle look poised to push the benchmark 30-year mortgage rate above 7%, according to Bank of America Global strategists. More than a decade of underbuilding in the U.S. housing sector has been squeezing renters and potential home buyers. Now, one of the analysts at Wall Street's biggest bank sees the imbalance as complicating the Fed's efforts to bring inflation down from a nearly 40-year high. They're saying that they're aggressively, raising these rates in 2022 has already cooled off stocks, bonds, sent the U.S. housing market into a recession. Borrowing costs for households and businesses are still climbing, right? We're seeing a little bit of that relief in the sense of if you're a commercial owner in New York, we're seeing a lot of people come back to work. Obviously, there were articles back in the beginning of the pandemic saying, hey, commercial is going to get hit hard, like more so than any other sector in real estate. And while that did prove to be true, we are seeing the residential take the lag of almost 2 years into this recession that we are currently in. So again, this high rents and the Fed's inflation, they're pushing this key mortgage rate above 7%. Not great news, but rates could go up in 8% is what I'm hearing. Biggest drop we're seeing, some of these, okay? Luxury home purchases plummet 28%, the biggest drop on record. Okay, so this decline was twice as severe in the Bay Area of San Francisco, Bay Area, in California. High-end home buyers are backing off from these high interest rates, the inflation, crazy stock market, economic uncertainty, right? When you have a luxury good and you don't know where the economy is going, you may not want to spend that money, right? You might have it, but you may not want to spend it. So these luxury U.S. home sales fell 28% year over year during the first 3 months, which ended at the end of August this year. Biggest decline since 2012, so a decade when they started keeping track of this sort of thing. This also eclipsed a 23% plunge that occurred when the onset of the pandemic brought the housing market to a standstill nearly 2 years ago. I'm going to show you a little chart here to end this stream here, where you can see the luxury home sales sinking to the most on record year over year. So again, going back to that data, 2023, 2012, they said they started calculating it. You can see when the pandemic was declared, and you can see where we're at today, down 28.1%. Crazy, right? And from the August, 19.5. So somewhere in that 19.5, 28%. And luxury is the red line, non is the gray line. So you're seeing those two side by side. Luxury is just almost 10% less than non-luxury. So we're going to start seeing some more pain, I think, again, with these bidding wars that are just not happening, people falling out of escrow, things are pending longer and longer as buyers try to figure out what they can sort of nip away at sellers being a little skeptical to even sell at all. So we'll continue to watch that, but those are the most important stories I see today in crypto and real estate. So if you like this kind of content, I ask you, please like this video, subscribe to the channel. I do a live stream every day, half crypto, half real estate, for the most important stories for you, so you don't have to go dig through them yourself. So with having said that, have a great night, and hope to see you all on the stream tomorrow. Hit me up in the comments. Let me know what you think, and I'll see you all tomorrow.